Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having an amazing day. We're taking a look here at Bitcoin. Going to identify a few key factors here, such as the previous descending wedge breakout, concurrent with where we're at right now. We keep retesting this 29,900 range. And again, the more often you retest level, the more likely it is to break. So we're going to talk about that and a handful of other factors, such as high block capital data. There's some important stuff here to note here today, some stark realities. And just generally good practice, all right? So if you're new to the channel, not a financial advisor, hope you can learn something here today. Obviously, you want to become a better trader. CryptoCash.tech is the website, link down below. Quick heads up, too, with our Discord. Congratulations to our current community members here for some nice profits there. We got a nice little Ethereum, 15% in 7 hours, and we hit 20% overnight with our automated trades there at Bitcoin. And just to kind of show you what's going on here, we are short on Bitcoin. 30,700 is our entry. We took profits at 30,100. We're looking at 29.7. That's our sights are set on that, if you will, right? So again, don't attach yourself to a narrative of going up or down. The market's bullish or bearish. It could be one or the other at any given time, right? So it's consistently changing. But for the moment, we're generally leaning more towards downside because we have this head and shoulders pattern. We've also got this wonderful Elliott wave pattern here as well, kind of confirming the exact same thing. We got our 1, 2, 3, 4, 5, followed by ABC. Looking for our C, of course, here. And the C is always going to be a lower low below the previous 4. Okay, so again, just an interesting little behavior pattern, candlestick that we're seeing here so far that I think will come to fruition. Just a matter of time, but for the moment, Bitcoin is effectively range bound between 30,000 and 31,000. It's almost exactly that little range there. So it's pretty much perfect in a lot of ways, but perfection can only run its course for so long, right? All right, so we're going to take a look at that. So let's go ahead and do this here first. First things first, help us grow our Twitter. Obviously, you probably already know that we have this, of course, but helps us to get this going. We started our Twitter last week. Cash trading is the handle, I guess you could call it. And we interact with our community. Awesome stuff. I have some giveaways as well as some technical and fundamental data. Everything you see here, I summarize it on the Twitter for our potential playout charts, etc. Okay, so cool stuff there. Let's take a look at high block capital and kind of see what's going on too. So one thing that's important here to note that with high block capital, we can kind of see, to me, this is a very stark reality here. Okay, so again, first of all, keep in mind the retail is up again here today versus yesterday. So yesterday we had some whales playing a little bit. They were selling off some markets or their trades in the market. And we can see here aggregated that overall we are seeing that less whales are active today. And what does that tell us? Well, generally speaking, that tells us that we're still at a price point that's desirable. Okay, so 30,000, there's no doubt that that's an average price. The average true range of Bitcoin is getting close to that now. So we can expect the price to probably stick within that. Again, when I say we're short on Bitcoin, I think 29,000 is probably the lowest point we'll see. It's like, I think 29.1, 28.5 is a worst case scenario as a likelihood there, because again, that's more recent highs that we could see. So I don't think we're going to see a pretty dramatic decrease, right? And I doubt it's going to be 25,000 or less, right? But there's a good chance we'll see a pullback before the next leg up. It just makes sense with the candlestick patterns we're seeing here so far. That said, let's take a quick peek over here at the net longs. And when we look at the net longs, what we want to look at here is the fact that we are seeing a lot more longs closing their position today than they are opening. Okay, so in other words, longs are closed. A lot of times what happens is when you see the price get to a certain height and then there's a potential reversal, you'll see longs close their position. Okay? So that's a very common characteristic there. We can also see that shorts are closing their position too, which is curious. Why would there be less shorts and less longs open today? Well, pretty much just means that we're hitting that average true range. So in essence, this is a good sign telling us that 30,000 is more likelihood of being the current price point, and we shouldn't see much lower. But again, candlestick patterns do have a tendency of changing and shifting themselves, right? So let's go ahead and refresh and kind of see what's going on here. We can see here with the net longs, we have some early longs, well, mid longs, I guess you could say. They're hedged at about 30,000. They're fairly break even. Got some late longs getting kind of hammered right now at 30,500. And as far as shorts are concerned, we got some nice shorts here. I wouldn't say that's late shorts. Those are fairly early considering the price action got to a high point of 30,500. Now you could see this shift in momentum here. On the charts on the 15 minutes specifically, you can see stochastic RSI peaking off, diverging effectively, and the price came back down. In fact, I'm frustrated by that because I saw that when I woke up this morning, and as soon as I got done eating breakfast, it was already back down. So again, those things happen. Keep this in mind. Anyone's going to be able to sleep through some good opportunities. So try not to FOMO in. Like, I'm not just jumping in at 30,000 right now because I feel confident that our previous trades will stay open, of course. I've already showed you that. And we'll hit our targets. But more importantly, you just want to be careful about jumping in when it's too late. Okay, you don't want to buy the bottom if this is the bottom, right? It could very well be. We could see a bounce up from 30,000. Let's talk about why that may not be the case, okay? So let's go ahead and go to this other chart here. It's a little easier to see without my head and shoulders. Because I want you to know that there is a head and shoulders pattern happening right now, but we don't want to focus on that for the moment. Let's go ahead and take a look at just some standard stuff. First of all, we can see stochastic starting to come back down. RSI finally broke below 70. Okay, so we're officially rejecting off 70 as of yesterday. So that tells us our lower high is in. Okay. Now keep in mind, you could say these are parallel highs if you look at the candlestick closure, but if you look at smaller time frames, this is a different story. That being said, we take a look here at the MACD. We're starting to diverge, but we haven't fully diverged yet. Okay, so no confirmation there as of yet, but it is telling us we're losing that momentum to the upside, which is pretty standard considering we shot up so quick. We take a look at the simple moving averages. Again, I like the simple moving averages on the larger time frames personally, that we can kind of see here that we have the price above all three. Okay, so those really don't tell us too much right now on the daily. The 4 hour, they're more relevant because we can see we're stuck below the 20-day SMA now as of the last 12 hours. We can also see that we're testing the 50-day SMA. Now, I've told you this before in the past, the 50-day SMA is a trend setter, okay? So if you see this here, you can see that the SMA is working itself ascendingly and effectively trying to work as a support level. If we lose that today and we do not close above, just say 30,500, there's a strong validation that we're going to see lower lows and lower highs moving forward. Okay, so again, keep in mind that is a trend setter. We want to recognize that the 4 hour simple moving average 50 is telling us that we're kind of almost losing this ascending trend. Okay, so that's another confirming factor. Okay, when we look at the 4 hour, we can see here as well, if we look at the RSI, we're kind of losing 50 also. We've been hovering there at that level, but losing 50 is not a great sign. You could argue that the stochastics is giving us a convergence here. It's not really all that strong, and you never want to trust the very first one. Oftentimes you take the very last couple of stochastic conversions, and then you use those as well. I prefer to use stochastic on different time frames. 4 hour isn't necessarily the strongest. I think the RSI and the MACD are more relevant, and we're still seeing a divergence here. And you could argue, too, that this divergence has to come to an end eventually, right? It's going to converge. You'd be surprised. These things can last a very, very long time. So try not to just think that just because this momentum is shifting on the MACD, it's just an instant win, okay? That's not the way to go. MACD is not the end-all be-all. It just tells you that shift in momentum should be coming because we've been maintaining this price point for a while now. But you got to recognize, we are maintaining this price point, but we're also retesting this level at 30,000 very consistently. Okay? Look at how many times we retested 31,000. Only twice, and we've retested 30,000 probably at least 5 to 10 times if you include the very first retest of that level. Okay, so again, with us making lower lows and lower highs, okay, that's not a great sign. Now, again, I get the question like, hey, is this a descending wedge type of pattern, right? It really isn't because we're making parallel lows and lower highs. When you have that parallel low and lower high pattern, in my opinion, again, this is just a candlestick pattern that I have, I believe is a greater statistical probability of moving in whichever direction. Since we originated from this range here, the likelihood of it breaking down is higher because we are making lower highs. If we were making, just say parallel highs, different story, we'd have an ascending wedge and we'd be able to break out to the upside. It seems less likely. And what's happening here in the back end, in case you're curious, is the bulls are essentially losing control. Slowly but surely, they're trying to make higher highs and they can't. And that really just tells us that the bears have more selling pressure at this level. Another thing too, you can see the bulls keep pushing the price action up at this point, but the bears are more successful because they're retesting that level more times than the highs, or the higher highs, if you will. Or sorry, lower highs. I know it gets a little confusing, but the bottom line here, you gotta trust me on this, this is a bearish type of sign, and the likelihood of a breakdown makes a lot more sense, especially if you combine Elliott wave, ABCD, or sorry, not ABCD. We're looking at ABC pattern here, where we're looking for our lower low here for our C. Okay, now I've described this in the past, but just to kind of reiterate, 1, 2, 3, 4, 5 is the first wave in Elliott, which essentially is establishing 3 higher highs and 2 higher lows. And then there's a reversal because it hits its highest point here. The second point is typically a lower low followed by a lower high and then a lower low. We're still determining this lower low here, okay? But the reason why it's important to recognize, and that's why head and shoulders patterns also are important to note, we can see this here, head and shoulders too, is the simple fact that the price action is more likely to decrease over here because it's going to establish a lower low, lower than the previous higher low. Okay. Again, I know that's a little bit confusing if you're not in the market all the time, but I can tell you this pattern has a very high success rate. And if you couple that with Elliott wave telling us the exact same thing, why wouldn't it go down? Okay. Again, just a lot of little reasons why I feel confident in our short positions with Bitcoin, Ethereum, and a few other things too. I also have a copy trading account, by the way, over on BingX for my standard futures, so feel free to check that out. We're fairly successful in that regard. It's been a pretty good experience here. So again, that being said, we're all in all looking pretty decent here, right? So for the most part, looking good. One thing I want to kind of touch on here is the hourly. By the way, when I keep saying looking good, I'm talking about looking good to the downside. It's more probable we're going to see further downside. Trying not to get that confusing or confused. Again, price could shoot up to 32,000 tomorrow, and it could stop out our shorts. That happens sometimes. But key takeaway here is we've already taken a majority of our profit in the first couple of targets, so it doesn't really matter too much if it turns itself around. We're still going to walk away in the green. And that's how you want to be a good trader, is to make sure to lock in those profits. All right. So that's kind of where we're at there on the hourly for this, that's the 4 hour. We're going to take a look at the hourly and see if we have any overextension. We do have a recent 9 here where we kind of got pushed out there. We came up and down. So that tells us we're a bit on the overextended side, but we got enough time to consolidate and retrace effectively, or we could see another few hours of downside. We also want to recognize and acknowledge here that the Ichimoku cloud, we broke below that. Keep in mind, range-bound activity, not the most, beneficial, if you will, because it doesn't give us the best identification of where we're at. But truth is, we're slowly breaking down lower, and we're spending more time below the cloud than above the cloud. And that's the important thing to recognize. So mostly bearish there. 15 minute. This is one thing I want to talk about here with stochastic. You can see here pretty clear that our second divergence here for stochastic RSI, price has dropped ever since then. So honestly, whenever I'm day trading, I'm looking for that type of momentum shift. If that's followed by a MACD divergence, it's also even stronger. So generally speaking, this tells us pretty much all green lights to leave our short position open. There's no reason to take a long into this, because once again, we keep retesting these lows, and the more likely you are to break if you keep retesting those areas, right? So I think 30,000 will break soon. We'll see somewhere in the range of 29.1 to 29.7 be the new range. I think that's probably pretty likely. Once again, time will tell. Try not to jump in too crazy and premature, but to me, these signs are pretty stark. Okay. I hope this was beneficial for you. Thanks again so much for joining me here. I look forward to working with you. And I also got a lot of requests here too. Hey, what's going on with the BingX stuff? Well, let's take a quick peek here. These are just the recent stats again for our trading. We got a short open right now that is technically in the red, but so far with a small amount of, I guess you could say we started with 500, we're up to 630. It's growing nice there. Already got a nice little copy trader there, so be sure to check that out. It's kind of fun to be able to have that new little trading account there, essentially for anyone to be able to follow. Keep in mind, we're going to have a perpetual specific area for our premium members to be able to join as well, so you can use that instead of Cornix. Okay, we're developing that more, but again, some folks don't really like the fact they have to pay for Cornix. BingX is free, so there's that feature too. All right. Anyways, if you have questions, go ahead and reach out to me. I have a lot of contact information down below. Remember, I will never direct message you. There's been some scammers in our Discord here trying to take advantage of folks. So just remember, myself or my admins will never direct message you first. We'll never friend request you unless we've established that connection already, right? So again, hope to hear from you soon. Hope you have a great rest of the day. We'll look forward to seeing you in the next one. And take good care of yourself. Goodbye.